wanted to come to you, just kind of talk a little bit about what's going on and hopefully have a little bit of fun. So what is today? August 18th. It's hot. We're in Arizona and the heat's real. This is generally our hottest month of the year. I think we're in that 110 to 113 range today, which basically is closing all trails that are any kind of difficult: Camelback, Picacho, the one on Lincoln, I forgot, Paso Peak. So yeah, if you're not out there before like 9, you probably shouldn't be out there at all, or at least till it starts getting dark, and then a lot of the trails close by then. Rates are moving. From my perspective, they're moving up a little bit. 10-year treasuries at 4.71%, which again, to average Joe doesn't mean a lot, but there is a mirroring effect of kind of what the 10-year treasury does as it pertains to mortgage rate. Reasonable numbers, you're looking at 6.5. If you're on a conventional loan, you're probably somewhere in that 6.5 to 7 range, depending on the lender, credit score, loan to value, all the fun stuff. FHA tends to come in a little bit lower, and there's a lot of reasons for that. I think the upfront mortgage insurance is the biggest reason, because you're kind of financing some of the risk in at the beginning there with an FHA loan. So 6.25, maybe with a couple points or even a point, you might get into the 5. Arizona news. Let's see. We live in a desert, but it doesn't necessarily mean that we don't have any water. It just means that we don't have a lot of water. And if you drive around the valley, it's kind of interesting because there's green trees everywhere, but they're all being drip system fed. So Lake Powell, which is up northern Arizona, I think that's going to be one of the first reservoirs to catch some of the Colorado River. It's super low. It's as low as it's ever been, 22% full. And, that's kind of a problem. I heard some folks talking the other day that the El Nino is going to be one of the biggest or most severe that we've seen in quite a few years. So hopefully that means water coming up north, maybe some snow. Record snowfall would obviously mean the reservoirs would fill up as that snow melts. So those are just interesting things to think about. Arizona, it's a nice place to live. It just gets hot. And again, I don't know what the water situation looks like in the next 50 years, but for now, we're not getting like water restrictions like on the consumer level. I think builders might have some, but not much, because if you look around, there's still a lot of build. Let's go over a scenario. So whenever I talk to folks, especially first-time home buyers, I like to give them visuals just so they know what a difference the rate makes. So what a difference the rate makes. So if you're quibbling over 0.25%, it's nice to see what that looks like. So I'll do like a little comparison chart, and today I did one for, I think it was 280. The lady just wanted something small out in Maricopa, trying to hit a price point. So I gave her 6% as if she was coming in with her own money down. I gave her 7% and 7.25% as if she was using a down payment assistance program. And the difference there was maybe, I think from 6 to 7.25%, it was like $180 a month, which over 30 years, big difference or big deal. That's whatever, 60, 80, $100,000 maybe. Generally financed in, if your down payment's $14,000 in this case, then your loan would start at $386, and then we'd add back in the 1.75% of $7,000 or whatever that is. So your loan would be in that $392 range. Typical tax rate in Arizona, at least the Phoenix area, you're looking at 0.5% per year to maybe 0.6, depending on the subdivision. City, HOI, homeowners insurance, I like to quote it around $125 a month. You can get it cheaper. For this particular model, we're going to do $100 a month because, I don't know, sounds better. But mortgage insurance on FHA loans across the board, unless you're putting 10% down or more, is 0.55%, and that's annual. And you divide by 12, and that's how we come to the monthly number. So if we're running a $400,000 purchase price at 3.5% down, the loan amount's going to be $392,755. 6% all in would look like $2,800. 7% would look like just over $3,000, and 7.25 would be $3,126 a month. That's not including homeowners association. That's not really part of the mortgage. Obviously, it's part of your payment, but it's not part of your mortgage payment. So as a consumer, you definitely want to consider that when you're budgeting, but you're not going to see that as part of your mortgage payment. So that's something to think about. Let's see. And the difference there, if you went from 6% to 7%, it's about $250. Now, again, long-term, that's a big deal. Short-term, it's about $3,000 a year. And the difference is, say you wanted to use a down payment assistance product, and most of my clients that are using down payment assistance, we're going to get the seller to cover closing, and the program is going to cover like 95% or 90% of the down payment. So a lot of people that are coming in with $3,000 to $4,000 total out of pocket versus $14,000 down, plus potentially closing costs, what have you. But at the very least, it's $14,000 down. So essentially, you're saying I'm going to trade $250 a month and keep my $14,000 and hopefully refinance the next year. Again, assuming decent credit, decent to good credit, 700 credits, primary residence. These are obviously no loan guarantees here. Those are kind of the assumptions that we're using when we're trying to figure out these interest rates. If we were going to do an overlay like an FHA versus minimum down on FHA is 3.5%, minimum down on conventional is 3%. Most people opt for the 5% off. Yeah, lower income, and that's not what it used to be. I think in Maricopa County, if you're 80,000 for the folks on the loan, I think you can take lower mortgage conventional, so that might make sense. But for the sake of the conversation, let's say 5% down for conventional, 3.5% for a excellent credit, 720 plus. I think you're 5% down probably on the mortgage insurance side. So your mortgage insurance on conventional fluctuates with credit, and where it's constant across the board. So if you're bringing them, there's always you always want to take a look and see which one makes the most sense, because again, your FHA, you're going to put that 1.75 into the loan regardless. So if you can avoid that and keep your payments pretty close, it probably makes sense to go. Long-term conventional is better because once you have a 20% equity position, your loan. So if you have a $400,000 loan and you only owe 320, you can contact your servicer and say, hey, I don't want to pay mortgage insurance anymore, and they're by law required to remove it. Let's see, it's all a big strategy, right? It's like, how much is the down payment? What's the cash to close? What's my 3-year outlook? Am I staying here? Am I planning on selling? Am I renting? So the big question is, like, what's stopping you? I mean, if you own a home, if you want to own another one, are you trying to wait for the rates to come down? We had that blip of time in 2020 and 19 and whatnot, where rates were super low, and they were really, honestly, they were low from like 16 to probably 22, something like that. It was a nice piece of time where we could have actually taken advantage of some really nice rates, but what happens is we get spoiled and, kind of hoping that those 3%, 4% rates come back. And I'm on top of the list. I want them back as much as everybody, but homes are still going to get sold and purchased, and people still need a place to live, so letting the rate dictate your actions in the market probably isn't the smartest. If that rate is the difference you want versus buying the house you can afford, that's a different conversation. But if you just personally don't care for the higher rate, then it's a math problem, and that's something that, like, someone like myself would help walk through and just kind of see what makes the most sense. Are we buying or refinancing? What city do you want to live in? All these things are important. If I'm in Arizona, I've been here for 25 years. I've always been on the east side. Does that mean I wouldn't live on the west side? Not necessarily, but I haven't. So a lot of people like to kind of stay with what they know, stay with the freeways they know. If you're in Tempe, Chandler, Gilbert, Mesa, it's likely you're going to stay there. A lot of people are like, oh, I want to move to Maricopa or Santan, get a little more for my money. And there's nothing wrong with that, but it is a change of scenery, and it's time. What's your time worth? Is that extra 30 minutes a day going to change your life, good or bad? If it's between owning a home and not owning a home, probably could make the argument that owning a home is the way to go. But yeah, these are just interesting conversations that happen every day, and knowing what you're looking for, kind of what direction you want to go with your life, with your finances, with your family, with your budget. All those things are important. If you have any questions, want specific numbers on a house, I love this stuff. It's just, it's fun for me. Problem solving, helping people really move their lives forward. It's good stuff. We'll try to do this on a regular basis. My name is Todd Uzzell, like I said, NMLS 152519. Currently with Starboard Financial. We are equal housing lender. And like I said, I'm also a realtor now. So if you have questions on the realtor side, or just want to see some homes, or get on a MLS list, let me know. I'm happy to do that for you. Hope you have a great day. See you next time.